Strong performance in Singapore, China, the US, and India helped Singapore state investor Temasek achieve a record net portfolio value of $434 billion for the financial year ending 31st March. This represents an increase of $45 billion from the previous year. Now, after taking into account the estimated market value of its unlisted assets, Temasek's net portfolio value goes up $35 billion to $469 billion. It's $49 billion more compared to last year. Now, amid the changing macroeconomic environment, it's been an active year of investments, with Temasek deploying $52 billion and divesting $42 billion. Some sectors it went into include the AI space. Now, Singapore continues to account for a significant portion of Temasek's portfolio, followed by the US and China. Investments in India saw a slight uptick, while exposure to Europe, the Middle East, and Africa declined marginally.
I think the largest risk that we see in the horizon really is around geopolitics. It's hard to see how that will unfold. So what we can do is actually we can build a resilient portfolio around that, one that can hopefully withstand different market cycles, different geopolitical environments as they unfold.
And for more, we have CNA's Nadirah Zaidi here in the studio with us. Now, Nadirah, we just heard Temasek citing geopolitics as the largest risk. How are they responding to this challenge?
Yes, that's right, Angela. So geopolitical tensions remain a key risk for Temasek. Now, if you look at their top three markets, Temasek is saying that it expects Singapore's economy to be under pressure this year. And for US, while risks around immigration, tariffs, and fiscal tightening may have likely peaked, they're still keeping an eye on those tariffs. When it comes to China, Temasek is also saying that it could be challenging for it to meet its 5% global targets based on the global tensions as well as the trade uncertainties. And also, Temasek, to add on to that, Temasek is also saying that investors, consumers, as well as businesses are waiting for some stability and clarity when it comes to tariffs, because it gives them some sort of confidence to invest. But, despite all these risks, Temasek is still seeing positive signs.
I think the risk of recession in most major markets is actually pretty low because governments have shown themselves to be very willing in providing fiscal support, and central banks also have a lot of room to ease. I think on the whole, we're still constructive on the macro, and we continue to find opportunities in the areas that we like.
So in Singapore, for example, Temasek is saying that there are ample fiscal and monetary policy levers to support its economy. And when it comes to the US, we should take note that there are bright spots, especially when it comes to their world-class capabilities in AI. And in China, Temasek is taking a long-term prospects, especially in areas like green economy, as well as life sciences, innovations, but also not forgetting its domestic markets and domestic companies that Temasek is saying that they are going in a very resilient manner.
So, Nadirah, how is the portfolio structured to build resilience and also diversification?
That's right. I mean, to build a well-resilient and well-diversified portfolio, Temasek is structuring its investments into three segments. First is the Singapore-based TPCs, or Singapore-based Temasek portfolio companies. And then there's the Global Direct Investments, or GDIs. And finally, there's also the PFAs, which is the partnerships, funds, and asset management companies. So if you look at the Singapore-based TPCs, this make up 41% of Temasek's portfolio. And these are companies that Temasek has 20% stake in. It's companies that we're very familiar with, like DBS, SIA. These firms actually provide stable and sustainable returns for Temasek. And when it comes to GDIs, it forms 36% of Temasek's portfolio. And these are investments into established or emerging market leaders. So firms like tech firms like Amazon, Tencent, and these companies are also aligned with Temasek's interests in trends like sustainability and even future consumer consumption. And finally, there's the PFAs, which make up the remaining 23% of Temasek's portfolio. And these are exposure to private equity funds, private credit, and hybrid solutions. So I managed to speak to some experts, and he said that these strategies actually help Temasek navigate, especially the volatile environment moving forward.
there's a certain element of taking more risk with the direct investments, but they mitigate that by setting up a lot of asset management firms and then spreading that risk out by having many different types of managers of many different skill sets.
Now, Nadirah, with these strategies, what type of companies is Temasek interested in right now?
Yeah, so in its report, Temasek actually did say that it's favoring companies that have a track record of stable cash flow and earnings. They're self-sufficient and have access to a large domestic market. And of course, they're also looking for companies with a resilient supply chain, especially, what's going on with the tariffs and the global uncertainties. And these companies, Temasek is saying that, it should be capable to withstand any sort of risk when it comes to geopolitical impacts. Temasek is also increasing its exposure to core infrastructure, and these are things like data centers, renewable energy plants, as well as replacing aging infrastructure. And we all know that Singapore is an aging population, so this is an opportunity that Temasek sees. And also, they're increasing its exposure across AI value chain. I mean, AI, it is the keyword today. And, but we also have to touch on early stage companies. Temasek is saying that, it's being very careful when it comes to investing in early stage companies, especially with what happened with e-fishery as well as FTX. So they already have a 6% cap on early stage company investments, and they're at 5% now. But they are steering a little more of its early stage investments to startups that are at the Series C or D stages. But after discussions with its risk department, Temasek did say that they have come up with measures to improve due diligence, and these measures include things like stricter background checks, especially on founders as well as its management.
Nadirah, thank you so much for breaking all of that down for us. That's Nadirah Zaidi with details on Temasek's latest report.